Hello everyone, good to be with you, and just adjusting my headset for a moment because I've lost my volume. Where's it gone? There we go, that's better. Great, hopefully you can see my screen. I'll just move that out the way. That's the chat box, get that down out of there. Where to start? There's a lot going on actually. I'll tell you what, let's start with the VIX, as Anna mentioned the VIX. There we are, let's pull the VIX over. Right, this is what the VIX is doing. We've got the 1 minute, we've got the 5 minute, we've got the 10 minute, and we've got the 1 day. And I have to say, when dear Donald is not around, it will make trading a little bit more straightforward because there won't be the booby traps all over the place that suddenly you step on a landmine and the markets go crazy. So I think I can't imagine that. What's his name? I've forgotten his name now. Biden. Can't imagine Biden's going to be quite so hot on the Twitter, but there we are, you never know. So this is the VIX, what's going on at the moment. As you can see on the faster time frame, we're falling. Hence, we are seeing a minor rally. We've had decent bullish momentum. You can see it stepping down again. Further weakness here. So, that's all good if you're long this particular market at the moment. That's not to say they're all equal. I'll show you in a minute that they're not. But what's interesting about the VIX on the daily chart is this over here, because we are still trading at this very high level in the high 20s, where we've been for an inordinate amount of time. And given the rally that we've seen over the last few weeks, this is still way too high. It is being basically VIX volatility is being bought big time on the expectation of an uncertain, well, two reasons. Firstly, on the expectation of a major correction, and secondly, on the possibility of extensive uncertainty over the result of the presidential elections. So that's the reason that the VIX is trading at this high level, where under normal circumstances, it would not. It would be back down in the 10s, 12s, 13s, 14s, that sort of area, and it isn't. It's holding up here. This was the reaction yesterday. With Donald on the Twitter, and it shot up late in the session. I'll show you on the chart as well. But right now, that's what we're seeing. We're seeing this falling nicely. So from an intraday trading perspective, at any rate, we should be seeing markets trying to rally a little bit. Let's go and have a look at all three of them. Where are we? Here we are. This is all three. Okay, we've got a nice move on the YM. The one that's moving the strongest is the YM. You can see it here. Big up candle. This was yesterday. It was reasonably up, and then it was hammered by the message from Trump. So decent update today. This is the NQ. You can see the NQ is really struggling. It's struggling to get off the volume point of control. And that's the other interesting point about the dailies. This is the ES over on the right-hand side here. So you've got the dailies at the bottom. You've got the 5 minutes at the top. You can see the trend that's building on the YM. That is really reflecting what is going on in terms of the VIX. Just pull that over again. There we go. Nice downtrend on the VIX. So the YM is really reacting quite strongly inversely, as you would expect, to the VIX. The NQ is really going sideways at the moment. And the reason for that, the ES is trying to rally along with the YM. So you've got two of them which are going up quite nicely intraday, and the NQ which is going sideways. And the reason for that is very simple, in that the NQ is clearly technology driven, and with the current pandemic and the prospect of a reduction in investment in infrastructure, in hardware, services, software, all the rest of it, that's why the NQ is struggling, because certainly in the UK at any rate, and I think globally, there's a trend, a very strong trend to working from home. Major corporations are starting to see the opportunity to cash in and get rid of expensive real estate, which is going to lay idle so they can get it off their balance sheets. All sorts of stuff going on. There's a complete change in everything, in everyday life here, in the way life is going to be thereafter. This is just a huge shift in the way we do things and the way companies operate and the way things work in the future and how it impacts these markets. And that is part of the reason why, obviously, the YM is more balanced. You've only got 30 odd stocks in there, big stocks, obviously, but it's spread across sectors, whereas in the NASDAQ, it's much more constrained. And again, over onto the ES, it's a much more diverse, obviously the 500 plus on the S&P 500. It's a much more diverse view of global sentiment. So that's what's going on in terms of the dailies. But as I say, they're all centered around the volume point of control. There is a huge amount of uncertainty. The markets, I would say, are febrile. They are also fragile. And these constant attempts to rally are really not going very far. We did a post about it, I think, the other day. And really, you can pick any of these to highlight the point. We did the post here, I think, on this day when we have a look at the volume. Look at the volume falling away. Is that, is that the signal of confidence? And the answer is no. In addition to which, you've got falling volume anyway on the uptrends. But look at the, the effort to rally, the effort to get through. There's volume going, and it's really not going anywhere. Lots of selling yesterday. It'll be interesting to see how this volume closes off today. Whether it's in, as Anna said, we're always looking for anomalies. We're looking for volume and price being in agreement, or is in disagreement. Are we looking for an anomaly? Are we looking for, what is that signal giving us? Is it telling there's buying? Is it telling us there's selling? Is it telling us that there's a lack of participation? And certainly yesterday, or the day before rather, was certainly about a lack of participation in the rally higher. There's an awful lot of nervousness around, particularly obviously centered around the election and what is likely to be the outcome, and how an incoming, democratic government would then relate in terms of how it's going to impact the markets. Let's just pop this up. There we go. What have we got? A little bit of weakness coming in, and that's, this is anomalous. Why is it anomalous? Because we've got high volume here, and we've got some weakness coming into the market. We've got a wick to the upper body, a deep wick to the upper body. So in terms of this candle, you can interpret that there is a lot more selling going on in there than there is buying. Why? Because if this were all buying, it would be a nice wide up candle, up here somewhere. And in addition to that, if you also look back in terms of comparative, remember we can compare volume over here because this is the open of the cash markets, 14:30 our time, 2:30. So we can compare the volume in here against one with another because we're comparing apples with apples. Up until that point, we were on Globex, comparing volume through here from the London Open right the way through here. It doesn't invalidate these small volume bars. It just means that the volume was much lower, but it's all comparative. So in terms of looking at the nature of this last candle, when you look at the volume that's driven into that, and you perhaps look at the volume associated with this candle, it tends to stick out, because if this volume is enough to drive this candle to that degree, we've got, I wouldn't say double the volume, but certainly 1.5 times the volume has gone in here, and yet the market hasn't moved at all. So the actual amount of selling that's gone on in here is pretty heavy. And if you're trading this to the long side, I'd say that's an initial warning sign. It's not a signal to get out. It's just a signal that potentially, we're starting to see some weakness come into the market here through that single prism of one candle and one volume bar. Now, obviously, you'll be looking at all the other things as well, but it just gives you that heads up. And, if we look at it over on the ES, what have we got? We've got a sort of similar sort of thing. We've got indecision, we've got wicks at top and bottom. Really not very strong in terms of a confident move higher. Are we going to see further congestion building? What's the VIX doing? The VIX has gone sideways now. It was falling nicely. I'll pull it over in a minute so you can see that. So, it's all a bit lackluster at the moment, and certainly with the volume point of control sat here, we're trading around here on the NQ, not looking terribly positive either. Let's go and have a look at the multiple time frames again.
And it's also at the R4
right
on the hour.
And it's, as Anna said, it's also moving up to the R5. Is that the ES or the NQ? No, YM, sorry. Okay, on the YM, on the MT. This is on the multiple time frames I'm on the ES here. I've got the 15-second, the 1 minute, the 3 minute, the 5 minute, the 10 minute, and the 15 minute. And really the 15-minute chart says it all, because this was the open, this was the trap move, nice volatility trigger, market spiking higher, lots of opportunity, traders jumping in and getting caught in the crossfire. And now we're starting to reverse. We've reversed back in the spread of that candle. We're still trading in the spread of that candle. If the market is going to move higher, I mean, the trend monitor is still blue. That's fine. You know, it hasn't transitioned at all. We've only had 2 candles falling. It's still trying to rally. We've got the R3 here, moving up to the R4 here on the Camarilla. So we've gone through the R3, but we're trading inside that range. And really, that's what's describing the price action right now. As you can see, the volume point of control is in evidence on all of them, from the 15-second to the 1 minute, the 3 minute, the 5 minute, and the 10 minute. And we're trading around this region the whole time. In terms of trading these markets, you know, again, you go down to, this is the 15-second, but VPA works in exactly the same way. If we're in sideways markets, as I've said many times before in these sessions, if you're going to trade these markets which are nervous, they're moving, generally not trending strongly. They are moving on an intraday basis in sort of lumps. They're moving a little bit and then congesting. They're moving a little bit, then congesting. And when you've got those sorts of moves, there's really only, you've got to go down to the faster timeframes, which you may or may not be comfortable with. But again, you know, this is the 15-second chart. And what do you see? What sticks out? What jumps off the chart at you? This guy here. You know, nice spike. 1.5 tons of volume, big operators are in here, nice trap move, volatility trigger, people jumping in, looking to go long. What's happening? Bang. And now they will either have been stopped out or closed out, either or both. Now we've got a volatility trigger coming in on the other side. Not so great volume on that one, but this is just a classic example of how to avoid these traps. Now, if you're in a position and you get one of these, I said this morning, and you're in profit, take it off the table, close the position, take your money and run to the hills. Because the worst that's going to happen is that the market is going to reverse, in which case you'll be delighted. If it carries on in the same direction, what have you lost? Not a lot. You've got to wait for it to clear that range of candle. If it's going to move to the upside, it's got to go through this level, which it never did. It kept retesting, retesting, and retesting. Couldn't get through there and wasn't planning on going through. And now we've got a full-blown reversal on your hands. So would you be happy? The answer is yes, of course you would. It's as simple as that. So if you have a profitable position and you get one of these triggers, I mean, it's $57 for goodness sake. If you get what this, and we had a comment, in fact, in the VPA forum yesterday from one of our trading students who just said he was so thrilled that he had the indicator because it saved his bacon 3 times yesterday. And that's the power of the volatility. What it's looking at is average true range. It's just expressing that in a simple indicator on the candle. But the beauty of the candle is it doesn't matter so much on this chart because we're on 15 seconds, so it's going to close off pretty quick. But if you're on a 5-minute time frame or a 15-minute time frame and you get one of these and it triggers in the first or second minute, and then it oscillates around that candle for the rest of the time, you have a 13-minute advance warning of that signal on those time frames. So it doesn't wait until the candle has closed. It actually triggers as soon as the metric of average true range has been met. As soon as the price action has moved out of that average true range, bang, the indicator triggers, and that's it. So you're not waiting for the candle to close at the end of that particular session, whatever it may be. It comes in real time. You just take the action you need to. Sorry, I've got the alerts on there. So what have we got now? We've got the exact opposite. We've come down all the way, decent move lower, value there, lots of opportunities to trade that. Come down here, what have we got? Decent volume under this candle, so we've got some buying coming in there. We've also got a volatility trigger. So what are we expecting now? We're expecting either some congestion or potentially a reversal back up to the other side. When you look at the volume profile associated, it's not terrific in terms of interest to the upside. We're seeing the VPOC move around. This constantly rebuilds in real time. So this is not something that is anchored, you know, at a level and stays there forever and a day. It's a dynamic thing. It will move once the volume in a region increases and exceeds the previous region. It will then move to the next level and so on and so forth. These levels on the accumulation distribution indicator you can see here, they build in real time as well. Every time they're tested or retested, they thicken. So they give you this terrific visual picture up and down the chart of the strength of the regions themselves. You've got a little cluster here of 4, and this is on 4. The one above it is a single. So you've got a little cluster there with a very strong level below. You've got another one here, which is 3. So that's been tested 3 times, just being taken out. This next one's being tested now. This might be a little bit harder to get through. We'll see. The trend monitor you can see here below is maintaining a bearish sentiment. When we had this little rally here, it started to say to you, I think there might be a slight change in sentiment here. I'm looking at this again, and possibly we are turning bullish at this point. No, I don't think we are. I think we're reversing back to bearish. Yes, I'm confirming we're now back to bearish sentiment, and that's what it's doing. It's basically giving you a visual representation of its view of whether this pullback is actually a pullback reversal or whether it's simply just a correction. In other words, are we changing from this primary trend lower into a primary trend higher, or are we just seeing the primary trend lower, the secondary correction back into the primary again? And that's what the indicator does. Now, we also describe that within the Forex trading program using volume price analysis. It is a powerful application of volume price analysis, which will give you the confidence to interpret whether the pullbacks and reversals you see in all trends, which are the most dangerous times for traders, because that is the point at which you will close out. You will be in a trend, it will pause, it will reverse, you'll take your money off the table, and that's it. And then it will continue. If you can interpret whether the reversal you're seeing is actually just a pullback or whether it is actually a true change in trend, that is the key to success, because most traders fail in this business not because they can't trade, not because they don't understand trading, not because they don't have good indicators. It's that simple fact that they cannot stay in a trend long enough to maximize the profit from it, because every time there's a pause point, they close out in fear. And that is an inbuilt it's an inbuilt reaction in our DNA. We will have it, we will have to battle it. It's part and parcel. You're not unique. We're all the same. We all have it. And Anna and I, no different. We still have it exactly the same way. When you've got a good profit built up and you start to see that pullback against you, your instinct is to bank what you have and keep it and protect it because you've worked so hard for it. But in trading, what happens is you take a lot of small losses. Well, hopefully you do anyway, not big losses, but you take a lot of small losses in this business, but they are easily outweighed by lesser of, but much bigger winners. And that's the basics of trading. And if you can manage that emotion, that is the absolute key to success in this business. It's really not about anything else. It's finding ways of managing that fear that drives your emotion to make an emotional response to a trade, as opposed to just sitting tight, analyzing it coolly. And that's part of VPA, because what VPA does is it takes you from that emotional position that your brain is in, your emotional stance. It takes you into a place where you're much more analytical and less governed by fear and emotion, much more governed by analysis and cold logic. May only be for a few seconds, but it's enough to give you that time to make that decision. And then on you go. So sorry to labor the point, but that's what it's about. That's the crux of this business. Just see what else is coming up on the, let's see what we've got. We've got a 1 minute volatility candle there on 1. So we would have seen that, nice volume under there, rolling back, away from that particular region. What do we see on 3 minute? We've got volatility on 3. No, we had it here. We haven't got it here. We've got the volume point of control in evidence all over the place. Weakness here, effort to rally. Not a huge amount of selling pressure under that particular candle. You know, for a widespread down candle, you might expect to see more volume. So, you know, the selling pressure is not really there. It's just in congestion the whole time. Move up to 10. What have we got on the 10-minute? Weakness. We had some buying coming in here. We tried to rally, and the rally just ran out of steam here. You know, good volume under that particular candle, and you know, it's just forcing down back onto the volume point of control the whole time. So it's really struggling the market, and that's despite the fact that over on the VIX, you know, the VIX is still sort of, well, it's in congestion on 1 minute. It's sliding lower. I would say no more than that. The 10-minute, okay, it's still trying to move lower. But it's really not driving the markets particularly strongly. Just going to have a look and see what's happening elsewhere. It's quick. Yeah. Yep. Okay. On the time frames. What did I have? Oh, sorry, that's the bonds. That's ZBs. Where are we? Sorry, wrong workspace. That one. That's on the ES. Do you want this on the YM?
Yeah.
Okay, I'll just change this over to the YM. So we've got the YM on multiples. There we go. Let's flick that over. Okay, now we're on the YM. Same contract. I'll just load that up. There we go. Okay. Oh, sorry. Did you want the Renkos? Yeah. Let me go to the Renkos for a moment. The multiple Renkos. Got those as well. Again, you know, volatility, bang, lots of volume, reversal, trapped. Traders jumping in there, trapped again, off to the upside this time. You know, this is what it's like. This is exactly what it's like at the moment. And if you're going to trade this, you've got to be real quick on your feet. You know. Yeah, the airlines will be, as Anna said, you know, Boeing's going up. It'll be helping to push the YM a little bit harder and faster. Let me go back onto the multiple Renkos. We've got Renkos and sorry, wrong one. There we go, multiple YM. There we go. Right, okay. Now I've got the YM on multiples. I've got on the top line, I've got the Renko, and below I've got the equivalent time frames. So basically what you're looking at here is I've got the 15-second, 30-second, and 1 minute below, and above it I've got the Renko, the exact time frame. So what you're looking at, let's just reset these, click that on 15-second. This is the Renko Optimizer, which will then deliver the optimal brick size. So what it's saying here is 7. So we're on the YM, the smallest trading point on the YM is an index is 1 point. If we were on NQ and ES, we'd be talking about ticks. Here we're talking about points. So each of these bricks is worth 7. In other words, $5 a buck on the small Dow contract. If you're trading the big Dow 25, that's fine. Do the maths yourself. This is on the 30-second. Let's just click that one on, see where we're trading on this. Excuse me. That just settles. That's on 12. So we're on 12 points there. Let's just set the 1 minute over here. Wait for that to settle. That's on 17. Okay. The slower the time frame, the bigger will be the brick size. But what you're looking at now is the optimal brick size for that particular time frame. So on 15-second, this is the optimal brick size is 7, 12 on 30-second, and 17 on the minute. And what this gives you is a multitude of things. It gives you a blend of using non-time-based charts, of which the Renko are classic. I've got tick charts on another workspace, may drop over to that if we've got time. But a non-time-based chart reveals momentum, because if the market's fast moving, the bricks will form in the time they take to form, which will all be different. The metric they work on is 7. The candles down here work on 15-second. The bricks up here work on 7 points. If 7 points move through the market in a nanosecond, then the brick's built and on we go. If it takes a second, if it takes 5 seconds, if it takes 15 seconds, that's how quickly the brick will build. So what you see on a Renko chart is several things. First of all, it's much smoother price action. You get the bricks, which smooth out the choppiness, as Anna explained. And secondly, you see raw momentum, because this is independent of time. Yes, it's set up against a 15-second time horizon, but outside of that, the bricks are totally independent of time in the speed at which they build. And therefore, what you see on a Renko chart, and you see it on tick charts as well, is momentum. When the market's fast moving, these guys build very fast indeed. On a 15-second chart or a 30-second or a 1 minute, they will close at the end of the time frame. You won't see that on a Renko. You'll see momentum building. The other point about it is these values that you set or are delivered by the indicator, they're optimal, so you're trading at the speed of the market. You're not guessing. There's no, well, shall I set it to 2, 3, 8, whatever. There's no guesswork. It does it all for you. And the other point about them is that in the session, they will change. So throughout the next 6, 7 hours, if you're trading this, you would be checking these values because the markets speed up and slow down, and therefore that'll be reflected in the Renko as well. So if you're trading the tail end of this session, 8, 9 o'clock our time in the evening, then you would have this at a much probably slower setting because the market is moving slower. It's sluggish. It's coming to the end of the session. The participation is low. The momentum's low. At the start of the session, it's much higher. When you get volatility, you get speed, you get participation, etc., etc. So these are moving the whole time. Again, these are not fixed values. They're not going to stay like that the whole of the session. If you're on these sort of time frames, you would be checking these maybe every, I don't know, 5, 10 minutes, something like that. If you're on a 1, 2, 3 minute combination, you might check those every sort of 15, 20 minutes. If you're on a 3, 5, 10 minute, much slower. So it's all a question of judgment. But what it gives you is this terrific way of looking at volume price analysis on the time-based chart below, in association with trading the advantages of a non-time-based chart and the momentum it reveals. I've got the trend dots on here. I've got the trend monitor, works in exactly the same way. Still bullish. You can see it here. We haven't seen any transition. The trend dots came off here. They went into red, but then they reverted back into blue. Still blue on the trend monitor. Same sort of picture here. Yes, we had a couple of red bricks. Yes, we had a bit of a reversal going on, but no change in the trend monitor. Yes, we had changes over here, but that wasn't reflected over here and certainly not over here. So in terms of using it, it's exactly the same style as you would use on a time-based chart where you're using multiples, but in this case, you're using multiple Renko charts as opposed to multiple time-based charts, but the indicators work in the same way. You've got the accumulation distribution indicator up and down here with these various levels, which are based on price and give you an instant view on the strength or otherwise of those particular regions. Let's just go over and see what's happening in the other markets. Let's go back to the multiple indices, see if they're actually moving at the moment. Not hugely. Let's go and have a quick look on oil. There was a decent move on oil, and let's just checking out the EIA. Bit of a build. This is very weak, the oil market at the moment. We did a post on this the other day, certainly from a longer term perspective at any rate. The market rallied. I think we said yesterday it was going back up to the VPOC at 40 odd 50. It's open gap down today, and it's looking structurally weak again. And the whole oil market is currently being driven by the supply and demand metric. And until OPEC step in, or until global markets start to pick up some momentum and some demand requirements, then it's pretty much going to stay at these sorts of levels. From an intraday trading perspective, makes absolutely no difference. Just trade what you see on the chart. From a longer term perspective, then it's a question of looking at the daily charts I've just highlighted down here. Bearish at the moment. Again, on the faster charts, flick that up there. This is the price-based level here. The market tried to rally. Very strong region up here in terms of resistance coming into play, which is the key part of VPA. Bang, bang, bang. Tried to break through there. Couldn't get through. If it had got through there, got low volume to the upside, would have gone away. Volatility trigger inside the spread of the candle, moving away down onto the VPOC, moved through there pretty quickly, actually, quite surprising. Breaking down again, rising volume on a falling market, fine. Then we get a little rally, volume's falling away, not looking terribly strong. Trend monitor's bright red, confirming the nature of the bearish sentiment. volumes falling away down here. Pretty weak response here in terms of any longer term move to the upside. So it's pretty bearish. Red on the trend monitor here, red on the trend monitor over here on 3, down onto 5. You know, no change there. Weakness on that particular candle. Market tried to rally, big uptrend, lots of volume coming in, big wick to the upper body. You know, looks pretty weak. On we go, down we go. And if we break through this lead region here, we're on down to the next level. You know, nice short building on that one. So there we go. Just see if there are any questions. Nope, that's it. Okay. I think we're going to wrap up there because it's, you know, I'm just looking over this. Have a quick look, check in on the VIX again, just see where we are. Well, you know, it's sliding lower, but hardly with any great momentum. It's on 5 minutes and on 10 minutes. You know, so it is moving lower, but the fact that the markets are really struggling in the context of the VIX moving lower really does give you some insight into what is going on in terms of risk on sentiment, certainly from an intraday perspective and from a longer term perspective as well. Because until the VIX starts to become more aligned, you know, this is going to continue well into this month and certainly into next month until after the election. And the markets hopefully at that point will start to settle. But the market is pricing in big volatility moves at that point. So we will see. So there we go. I'm going to wrap up there. Thank you so much for coming along today. Hope you've enjoyed it. We are back. It will be Tuesday next week. Sorry for the move to Wednesday this week. We're back on Tuesday. 7:45 UK time for the Forex session, and the futures will be in the afternoon at 3 o'clock. So we will see you then. Enjoy the rest of the trading day. And stay safe and stay well and enjoy the rest of the trading week. And we will hopefully see what Mr. Trump has to say over the next few days. I'm sure he will have a lot to say as usual. So thanks a lot. Have fun. Enjoy your trading and see you again soon. And oh, forgot to say. Silly me. There we go. Just move that out of the way. I knew it was something, couldn't think what it was. Just to show you, just to point in the direction of where you can find all the various bits and pieces. This is quantum trading, where you'll find all the indicators. Ninja Trader, MetaTrader 4.5. Remember, these are one license. So in terms of investing in them, you get to use both platforms. It's not a single separate license. It's a single license, covers both platforms. It's your choice. TradingView, TradeStation is definitely going to be launched in October. I can categorically say that now with confidence. I can't tell you exactly when it's going to be in October, but it will be in October. Both platforms, 9.5 and 10. If you have an Interactive Brokers account, the good news is you can hook it straight through to TradeStation International, TradeStation Global, and run that through and trade the deep discount brokerage of Interactive with the beauty of the TradeStation platform. TradeStation 10 will be TradeStation Securities. Both have radar screen, all the goodies. It's a terrific platform. Very excited to get that launched. Radar screen. We've ported all the indicators across for radar screen as well. And it's amazing. You've got, I think, 1,000 plus on, or up to 1,000 opportunities to consider that on TradeStation 10 and above. So you can apply the indicators and apply them to various charts in that way. You can find all Anna's analysis here at annacooling.com. All the books are up on Amazon, either in Kindle or in paperback. And in terms of the Forex trading program, that's over on quantumtradingeducation.com. It's called the Complete Forex Trading Program because that's what it is. The psychology module is huge. It's got 8 PDFs attached. Deep dive into fundamental analysis, relational analysis. The technical analysis module takes you into a much deeper study and understanding of price and volume, Wyckoffean principles, and also in detail about this whole business of understanding the difference between primary and secondary trends and how you analyze them using VPA. Onto the mechanics of trading module, and then we have over 200 hours of video and video podcasts, and of course supported by the VPA chat room, which is Anna and myself were there all the time. That's it. Where are we? That's labs.quantumtrading.com. So we'll be publishing updates on TradeStation there as and when. I've no doubt that there will be some bug fixes to sort out. I'm sure there will. We've tested everything heavily, but there's always a few bits and pieces to sort out once we've launched. But that all comes as part and parcel of what we do. We always support you, just buy the indicators, and then we do all the development work, ongoing development, upgrades to platforms, all that. You never pay another penny to us. We support you all the way. Once we've done TradeStation, we're going to drop back onto TradingView, and port across all the other indicators there that are missing, because we now have the option to do object and line drawing in the Pine script, which we didn't have before. It wasn't sophisticated enough to handle that. We have that now. So if you have the TradingView package, we are porting all those other indicators across. So currency matrix will be there, the VPOT will be there, and all the others as well. So we'll be dropping back onto that straight after we've launched the TradeStation platform. After we've done that, we've got some other things. We're looking at a dashboard for MT45. We're looking at doing multi-charts, porting those out. That will probably be early part of next year, I would think, by the time we've done all the other stuff. And we've got some new indicators as well to be working on. So there we go. Thank you very much indeed for staying with it. And we will see you again next week. So bye for now.